Hello, my name is Clive Cochrane, and in this short video I want to cover a really quite critical idea in finance, and it has special relevance in today's market because what I want to talk about are that warnings are coming from the debt markets, and you could just as easily call that the credit markets or bond market in a way. Warnings are coming about the risk premium which is implied in extremely low credit spreads. What I want to do is explain those two ideas. First of all, what do I mean by a risk premium? And secondly, how can I maybe illustrate that by referring to a key credit spread? A risk premium essentially is a reward that can be provided via the markets for taking on additional risk. Typically speaking, the idea is, in terms of the risk reward calculus, that there should be an implied reward if you're willing to take on additional risk. And now that can actually be well illustrated by the example I'm going to give based on this chart, as you can see here. What this chart shows, it comes from the Federal Reserve by the way, is the spread on, let's say, a junk bond or sub-investment grade bond versus the yield on, let's say, a 10-year US Treasury note, which we have to assume is credit risk free. There will be no defaults, at least we hope not. This chart covers a 10-year period here, as you can see, going back to 2016 and current as of the end of September 25. And the spread, especially I'm going to focus on this surge in the spread here. This occurred at the onset of the COVID pandemic in 2020. The spread moved all the way up to 11%. So to explain that or illustrate that, here's basically what was happening in this time frame. The yield on a 10-year junk bond in this sort of time frame was around 13%, let's say on average. Whereas the yield on a 10-year Treasury note was around 2%. So if you subtract the 2 from the 13, you get 11%. Now, as you can see over here, the yield spread, or the credit spread, has come all the way down to below 3%, which means in effect that investors are not being rewarded with a very satisfactory risk premium for taking on the additional risk of owning junk bonds rather than, say, credit risk-free bonds. If you find this kind of thing interesting, please check out my YouTube channel, The Cochrane Codex, and thanks for watching.